Hi. Common tax filing mistakes that trigger IRS audits. I'm Juliet Collin with Beckley Associates. Want to avoid an IRS audit? Here are some common tax mistakes that can raise red flags and how to stay off the IRS radar. Failing to report all income. The IRS gets copies of your W-2s and 1099s. If your return does not match, they'll notice. Forgetting even a small side gig could trigger an audit. You can avoid this by double checking your tax forms before filing. If you did freelance work or got paid through Venmo, PayPal, or Cash apps, make sure you report it. Additionally, you can sign up for an IRS online account to see what income has been reported to the IRS. 2. Overdoing business deductions. Self-employed, business deductions are great, but claiming too many meals, travel, or home office expenses could raise suspicion. Avoid this by being smart about deductions. Keep detailed receipts, track business related expenses separately from your personal, keep a mileage log, and don't write off that business meeting at a five-star restaurant unless it's legitimate. Number 3, claiming a home office deduction incorrectly. Does your home office double as a guest room? The IRS says it must be used exclusively for business. Make sure your home office is a dedicated workspace. If you're unsure, use the simplified deduction method. It's easier and reduces audit risk. Number 4, rounding numbers instead of using exact figures. If your tax return looks too perfect with all numbers ending in zero, the IRS might take a second look. Use exact numbers from your bank statements and receipts. If your expenses look too clean, the IRS may assume you're estimating, and that could be a problem. Number 5, large charitable deductions without proof. Donating to charity, great, but if your contributions seem too high compared to your income, the IRS may ask for documentation. So be prepared. Always get receipts and acknowledgement letters from charities. If you donate more than $250 at once, you must have written proof. An audit doesn't necessarily mean you did something wrong, but avoiding these mistakes can lower your audit risk. Want expert tax guidance? We can help. Follow us for more tips. Subscribe to our YouTube channel, Beckley Associates. This is Juliet Collin.